Welcome to GoldSilver.com Radio. My name is Lee Greenberg, and I am your investor and guide. It is our purpose at GoldSilver.com Radio to keep our fingers on the pulse. And today, our guest is Mr. David Morgan, founder of SilverInvestor.com. Welcome, Mr. Morgan.
Well, thanks for having me. It's great to be with you.
It's a pleasure. There's perhaps some of our listeners out there who don't know who you are or Silver Investor. Could you tell us a little bit about SilverInvestor.com and the Morgan Report?
Well, you bet. I wrote a book called Get the Skinny on Silver Investing several years ago, and what I point out in that book is that the currency changed, or actually the metallic coinage changed when I was 11 years old. Up until 19 and through 1964, the circulating dimes, quarters, halves were 90% silver. And in 1965, they turned into what I call the Johnson slugs. They were cupro nickel. They were copper that was sandwiched between nickel plating, etc. So I started diving heavily into the silver market on a study basis, on an intellectual basis. Why would you choose silver over gold? And so that study, of course, continues today, but nonetheless, I discovered some fascinating things about silver that make it such an interesting investment, because not only is it a monetary metal, but it's also, of course, an industrial metal. And those two facts work together, sometimes at a slight disadvantage depending on the overall economic health of the United States or the globe.
Is there anything particular that you were reading or an author that stands out?
Oh, very good question. There was a gentleman named Jerome Smith, and Jerome Smith founded a company called Economic Research Counselors, and they were based in Vancouver, BC, and other places. And this is opinion only, but I thought they were probably some of the best analysis around. And he was more prone towards silver than gold. He wrote several books that focused mostly on silver. He wrote Silver Profits in the 70s, which it's rumored that the Hunt brothers, got a hold of read, and that was one of the main reasons they favored silver over gold. He wrote Silver Profits in the 80s, a follow-on to the Silver Profits in the 70s, What's Behind the New Movement Silver, The Coming Currency Collapse, and several other books. So I followed his work and many others very closely, but his arguments were very, very solid. And I really thought that, after, the 1980 peak, that the way to go longer term was probably in the silver market, of course.
So we're talking about the bear and bull market of silver. The silver peaked in May, and it's pulled back quite a bit. A lot of people ask, is it too late to get into silver now?
I don't believe it is. I mean, fundamentally, until things straighten out, we go back on some type of a system where people have confidence and trust it, we're going to see the system break down further and further. There'll be the ebbs and flows. There'll be times where it looks like, the U.S. dollar is probably the best place to be, and in a certain small time frame, it may be. But on a longer-term perspective, again, until these problems are rectified, the only place to be for safety is in the precious metals, in my view, and history bears that out. It's not me thinking up anything new. It's a simple fact that when you have this much economic uncertainty, you have to go to something you can trust. And then you go back to a bigger perspective. Central banks became net buyers of gold a couple of years ago. So anything you care to look at objectively, you say, look, what are the facts? I don't want all the opinion. All I want to know is what is a fact. Well, the fact is central banks became net buyers. Nation states are buying. People that understand what's happening are buying. So the truth is that it's not too late to get in silver right now. Can I get it back at $5? No, those days are gone. But buying in the low 30s when it's already touched 50 and looking like there's only more problems on the horizon, not less, certainly I think it's a great time to start getting into this market.
What are some of the problems that you see? Maybe the economy, the factors that are influencing the price of gold and silver?
Well, the main problem really boils down to one fundamental flaw, and that is the inability to tell the truth.
The Federal Reserve or the president or the banking industry or all of the above?
It's pretty much all of the above, because it's the Federal Reserve / banking industry that doesn't tell the truth. And here's my point. First of all, we teach our kids that you can't get something for nothing. And yet the whole system, meaning the Federal Reserve System, and basically it's practiced by all central banks globally, create money out of nothing. So you can get something for nothing. And, of course, you can't in a real sense because somebody's going to have to pay a huge price for that eventually. And that's the point we're at. Of course, the politicians are to blame, in my opinion, because they go along with this. There's no politician, or there's been very few, that have stood up and said, no, this isn't right, we're going to fix it. I mean, you can make an argument about John F. Kennedy signing into an executive order to actually go back on United States notes instead of Federal Reserve notes, and we don't have time to go into that in this interview, but that's one. You had it a couple other times in U.S. monetary history. Regardless, that's the point, that you create something out of nothing, you give it value, it's for an elite sector of the economy, it's the banking system or the primary banks and the commercial banks that support the Federal Reserve System or are members of the Federal Reserve System. And, of course, this dilutes the money supply for everybody. So it basically gets a burden put on the backs of the people. The people that make up this new money first have a big advantage over the people that this money trickles down to. So that's the crux of the issue, in my view.
More currently, the MF Global situation, is this a single event, or is this the tip of the iceberg?
Tough call. I listened to, I think it's Ann Barnhart, I'm not sure I'm saying her last name correctly, but she did an interview with Jim Poplava, and I just read the transcript of it last night. And I have to say she gave a no-holds-barred type of an interview. She thinks it's more to come. I tend to agree with her. Usually these things tend to, as time goes on, they tend to get worse, not better. This is what happened, of course, in the investment banking community. I mean, you had Lehman Brothers, Bear Stearns, and even if Bank of America hadn't come in and rescued Merrill Lynch, Merrill might have been the next one to go, and had Merrill gone, it might have taken down the entire system. It's hard to say. I think that's a pretty accurate take on the situation. I don't want to be too dramatic, but the facts are simply that everything's interconnected. All these brokers and banks are interconnected. They've supposedly or purportedly protected themselves with these credit default swaps, so if somebody fails, they have an insurance policy. But there's counterparty risk to those. And so the Federal Reserve has basically come in and taken all this bad paper that no one trusts. In other words, these investment banks and commercial banks don't trust this paper at all, won't swap it or trade it with each other anymore. So because it's toxic, no one wants anything to do with it. The Federal Reserve has come in and sucked up all this toxic waste and replaced it with government-backed securities, meaning short, intermediate, and long-term bonds that are basically borrowing money that has to be paid back by the American populace. And so this has kept the system going. Otherwise, it would have failed. So, if you really understand what's happening, it's rather frightening.
How much longer do you think the system can go?
Well, that's always a tough one. One of my mentors was Harry Brown, and he taught me early that these things can muddle on, that was Harry's word, longer than you might expect. Having said that, I really would have a hard time seeing it go another 2 to 3 years. I think the breakdown has gone so far and so deep at this point, as we're doing this interview at the end of the year in 2011, that it's probably not capable of going all the way to the end of 2013 without, much more of a breakdown. But I would rather have people be too early than too late. The problem is that if you believe that things will just continue in the same paradigm forever, I think you're making a huge mistake. If you think they're going to break down further, then I think you should take advantage of these prices at the current time and start building your protection now.
I think that's a great point. And on that note, I'm going to thank you very much for joining us.
My pleasure, Lee. Thank you. Bye-bye.
This is Lee Greenberg reminding you that if you can't hold it, you don't own it. Thank you and have a great day.